GME on the weekly. Basically, these have tightened up these rectangles here from the volatility that we got contracting in here. Obviously, this past week, this candle that we had, you can see the extremely high wick in here from that high that we had at I'm sorry, 29.80. Then you had that low in here of 21.16 this past week because you had that huge gap and go. And then the next day you had that huge just volatility picking in that gap down and then just a tank in here. So after those two trading sessions happened this week, volatility got sucked out. So really, these rectangles right here got a little bit smaller. I haven't touched these. I'm still going to leave them on just in case volatility does expand back again. But really, all the expected moves in here are smaller now. So right here at the $21 level, what we're trading at, expected moves right around $3 within this rectangle. The next is about 5. And if you go out here to your June, it looks like right around a $7 expected move in here. So we had a right around a $10 expected move placed in here. It looks like that has shrunk down to right around $7. So a little bit of shrinkage in here with your volatility. Obviously, that's going to happen after those two huge moves. Everybody has to overcompensate the opposite way now to kind of take a breath from what we just had. Obviously, extremely high volume in here, and you had RSI pulling back in here overall from the previous weeks just because of what happened here on those two trading sessions. We are below this 9-day EMA. That's currently at 24.72. Above that, we're looking at the 200, which is 26.98. And above that, really the area that we care about is the $28 level for our next resistances. Support wise, we're going to be looking at this $19 area. And then below that, we're going to chalk it up to down here, this lower end of this rectangle, which is right around that $14 area. That's about the fringe, what everybody's trying to price in for an expected move in here. If you go all the way out to June, so that is around 82 days out. So it's a little bit further than what you would really want to play with. But your 30 Delta Strangle in there is more or less trading for right around 346. So decent sort of premium, but you have to go very far out. So that is the problem. So we want to stay within the $45 to $60 range when we are trying to sell strangles and things like that, try to suck out premium. So this is a little bit much. We can try to see what the May is pricing in. That's right at $47. It's always hard when you're kind of within the expiration that you want is right at the fringe of 45, and then following expirations all the way out 80 to 80 days. But your 30 Delta Strangle in here is trading for right around, let's see, 632. So better juice in here, but you also are closer on that put side when you're doing that 30 Delta Strangle. If you want to go out and try to make it even, so you can go about $10 one way and then $10 the other way, you're going to obviously lose a bunch. But you are going to get still a pretty decent price in here, but 492. But your 30 Delta is going to be right there at that $20 strike. So you're not going to get more premium, but you're closer to the actual stock price, the underlying asset. So you could breach that short strike in there. So that is the reason that your 30 Delta is so juiced up in here for this May expiration cycle. Again, what are we looking at in here going forward on the weekly? Well, it looks like we're going to stay within this channel here from the 19 to the $28 range. If anything, we're probably going to be tightening in that, right? So really, we're going to chalk it up to about 21 to right in here about this $26 level. That is probably what's going to happen because I think the $20 will hold, but if not, then this $19 level is going to be a major support for us in here going forward. So we'll see what happens this following week, and we'll see if we're still going to respect our shaded areas in here, and if these are actually going to get tightened and shrink even more with the volatility coming out of it here in GameStop on the weekly chart. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.